Welcome back, members. Hope had a good lunch. Okay, I request our Regional Council member Geeta ma'am to escort the speaker of the session, Annapurna Kabra ma'am. Hope speaker of this session does not require any introduction, but as a process, we introduce our speaker. Annapurna Kabra ma'am is a fellow member of the Institute of Chartered Accountants of India. She has completed her DISA and DARM course of the institute. She has contributed the articles on VAT and GST, and she is a regular speaker at various forums. She has authored other many books and co-authored certain books. She has contributed various e-lectures on topics of VAT and GST to IDT committee of ICA. She has contributed short videos on certain topics of GST and to ICA. She is a state tax committee member of FKCCI, and she is a faculty to the GST certification course as conducted by the ICA. She is member of Bangalore Study Group of ICA, and she is a committee member of a development and study module for Karnataka Commercial Taxes Officer, and she is a regular faculty to Fiscal Policy Institute. She has given training on Digital India to women's entrepreneurs of Mageshwari Group. Apart from this, she has addressed more than 400 seminars across India. She has addressed gathering of chartered accountants, tax practitioners, dealers, and department officers on indirect taxation matters, including GST in various forums. She is practicing in Bangalore, and she is a partner in HSKA and Associates. Welcome you, ma'am, once again. With this brief introduction, I hand over the session to the speaker.
Good afternoon. Good afternoon. Hope you enjoyed the lunch today. Yes. I think, first of all, I thank Bangalore branch of ICI for giving me an opportunity to share a few insights on the topic which has been allotted as detailed discussion on clause 44, not tax audit 44 AD I'm talking. I'm saying it's a purely on one clause, that is clause 44. And I think most of you are well versed with that clause. But today we'll be having a more interaction session on that topic. And I don't know how many of you would have seen, I bought the book of GST in that topic of tax audit today. Because I have to try to see that, is there anything interlinked with the GST law today, or we are purely talking on clause 44, right? So before going into this topic, I remember 3 years back in 2017 when this clause was introduced, I was a part of tax audit panel, and this clause was asked for me to discuss actually. They asked me to discuss on this clause, and I remember they deferred this clause. So, but now I don't feel they will defer it, right? So I think now they might make it mandatory. They had made it mandatory from 1/4/2022, as you all are aware on this. But just as this is from 3 to 4 years, this clause is there in the tax audit, but this was not mandatory. Now it has become mandatory, so we have to get well versed with this clause, right? Though a lot of association have approached to the government for deferment, but till date, we have not seen as any deferment will going to happen. So we have to start working upon this clause simultaneously along with your tax audit report. So I think this picture is giving certain insights. I think here I indicate as on the right hand side as a tax auditors, and on the left hand side I'm the speaker, and the below part diagonally is showing something is in black and something is in white. It means something is some issues have clarified and some issues have certain doubts. So this is what before going into this topic, I want to take a disclaimer that there are certain views which might differ from the other views also, but we'll try to see that what best uniform view we can have on the issues, whatever is going to happen in clause 44, right? Right? Yes. So first of all, before going into this class, I wanted to say that that as you all are aware, this was applicable from financial year 17-18. The reason was GST was implemented from 1st July 2017, right? It is deferred due to practical difficulties in compliance of this clause, and also pandemic time was there for 2 years. So because of that, it has been deferred and deferred up to 31/3/2022. Now this is going to apply for the filings which are done after 1/4/2022. So this also has various issues, whether is it pertaining to financial year 21-22 or is it applicable to 22-23, because it is using the word filing after 1/4/2022. So definitely filing is happening after 1/4/2022. So this is applicable for the financial year 21 and 22 also. So the tax audit report which are going to file now for 21-22, this clause is also mandatory to be included. And next is section 44AA of the Income Tax Act. We all know that it deals with the maintenance of books of accounts to compute the total income. Then how this clause is going to impact your computation of total income? Yes, because if you read clause 44A, it is specifying what are the details of books of accounts to be maintained by the dealer to derive the total income. But this clause, I don't find anywhere. I don't know, at the end of the session, we might have different discussion on this, but I did not find this clause which might have impact on your computation of your total income for the purpose of income tax. Next is section 44AB requires to furnish form 3CD in a prescribed form. We all are aware on that. What is the objective of this clause 44? Anybody can highlight on that from income tax perspective? What is the objective of clause 44? Before going into any clause of tax audit, we have to understand what is the object, what information the government is going to get, or what information the government is going to get from this clause actually. What is the object of disclosing the informations as required in clause 44? We are not clear actually. It is a mystery today. We are not very clear what is the object, but this is a requirement. This is a mandate of the tax audit report. So it has to be disclosed. Is it something at the future assessment? They are going to reconcile the informations between the income tax law and the GST law. Is it a reason for that? Or is it some internal analyzing report they want to prepare on this expenditure based analyzing? So is it that reason to include that clause? Nobody is aware of that, but I believe that there is some requirement from the government to incorporate the correct details in clause 44, right? So that is what I believe. This is from the income tax perspective, I'm able to understand. No admissibility of expenditure based on registration of vendor. Am I right? Irrespective of the registration of vendor, the allowability of expenditure will be dealt by the sections under the Income Tax Act. It is irrespective of whether he is a registered or he is unregistered. I believe that it will not going to impact your allowability of your expenditure in the income tax. So based on that, I don't know even that this analyzing also makes me to understand that this is not going to derive the total income or allowability of expenditure, whether based on the vendor, whether he is registered or unregistered. So this is also one of the analyzing we can understand from this. And even the next part is fake invoicing. Can we find out any bill trading transactions or fake invoicing based on this disclosure of clause 44? Even that also cannot be derived, because there is a possibility that fake invoicing can happen with the registered vendors also, and it can happen with unregistered vendors also. So based on that, even that will also not serve the purpose from the income tax perspective or from the GST perspective. So that is what the question still remains open for all of us today to understand what is the objective of clause 44. But still, we, as it is a mandate under the respective form, we are supposed to work upon that, and we have to supposed to comply under the income tax law, right? If you have any questions in between, we can take it up at the end of the session. Please mark the questions we can have at the end of the session. Now let us understand what is this clause of breakup of total expenditure. They are just asking the breakup of total expenditure of entities registered or not registered under the GST. So first question is, this is applicable to all the registered person. This is not only applicable to registered person, this is also applicable to the person who is not registered under the GST law. So the registered person is defined under the GST law. Who is a registered person? Registered person is a person who is registered under section 22 or liable to be registered under section 24 or 25 under the GST Act. So basically this is applicable to all type of entities, whether registered or unregistered. This is the first important point we have to understand. And next very important is, it is broken up into expenditure from the registered entities and unregistered entities, right? So this is from the total amount of expenditure incurred during the year. The first important is, it is something as an expenditure which has to be incurred during the year. So there will be no opening balances which will be taken here. This will be the purely the expenditure which has to be accounted for the financial year. Expenditure in respect of entities registered under the GST. So that has broken up into 4 segments. That is relating to goods or services exempt from GST, relating to entities falling under the composition scheme, relating to other registered entities, and total payment to registered entities. So this is the segment of first limb of expenditure in respect of entities registered under GST. And the second aspect is expenditure relating to entities not registered under the GST Act. So they are basically dividing the expenditure into 2 components. One is the expenditure from the registered vendor and the other is expenditure from the unregistered vendor under the GST law, right? Now let us understand this in detail. So before proceeding into, you can get the informations from your taxpayer or from your clients. You can get the expenditure in this format, and this format has been specified in guidance note of Institute of ICI also, where you can try to get the details of expenditure, name of the entity to whom the payment is made. You can get that entity name also. You can get the GSTIN details. You can get value debited to your expenditure account, value for which input tax credit is taken, and total amount paid to the vendor. So any other informations you can add it for reason for nil GST. If they have not charged any GST on specified items, you can try to get that informations or any other information. So this will help you out to get the informations for breaking up your expenditure from registered person and unregistered person, because GSTN of entity will give lot of information. So I think, and name of the entity. So I think this also you can get as a source. This is only a recommendation. This is not mandatory. You can design your requirement of information from the taxpayer depending upon the nature of business of the vendor, right? Next is applicability of clause 44. Is it that is it applicable only when the tax audit report is mandatory, or is it that it has to be reported? So we are very clear that only if the tax audit report is to be filed, then only this clause 44 will be applicable. That is the first important point. And it is applicable for audit report after 1/4/2022. We are very clear on this. Now next is applicable for prior to 1/4/2022 if it is not filed for erstwhile period. Let us presume that one of the entity has not filed tax audit report for 18, 19, 19, 20, 2021 and 21, 22. So now they have come to you and they said you can file our tax audit report for 4 years. So will you apply this clause 44 for all the 4 years, or will you apply this clause 44 only for the financial year 21, 22? All the years? Why? Because specifically they have stated filings after 1/4/2022. So it has to be incorporated after for the all the 4 financial years. Is it applicable for revised tax audit report also? Because you want to revise the tax audit report for the erstwhile period like 18, 19 or 19, 20 or 2021. You can revise the tax audit period, right? So can you, in that revised tax audit report, should you incorporate clause 44? Yes or no? We have to see the portal actually, whether that portal is asking for this information, right? But what is your view? Should it be incorporated or not? Yes? Yes. So according to my view also, if you have to revise your tax audit report, please don't forget clause 44, right? Even that has also to be incorporated in your revised tax audit report. Next is it applicable even if the GST audit report is not mandatory? As you all know that if the turnover is above 5 crores under the GST law, that is aggregate turnover is above 5 crore, GST audit is mandatory and it has to be certified by the taxpayer. We are very clear. So whether such entities are also, if they are not having any tax audits, GST audit, whether this clause is mandatory. Irrespective of whether audit is applicable for the registered person, this clause is mandatory because this clause is required under the income tax law and not under the GST law, right? Is it applicable for all the entities, this clause 44, what we are talking? Yes, it is applicable for all entities except who have opted for the presumptive taxation. That I think you are aware, 44 AD, where 6% or 8% of the profit you have to disclose. 44 ADA, I think that is pertaining to this medical, and 44A is for the GTA where it is less than 10 vehicles. So all those presumptive taxation, for those entities, this clause 44 is not applicable. And turnover less than 10 crore, where their digital payments are more than 95%, then for them it is not applicable, or cash receipt or payment is not exceeding 5%. So these are the entities for whom this clause 44 is not applicable. Otherwise, all other entities, it is applicable wherever tax audit is required. Next, first question arises when I was reading this clause 44, whether expenditure as per income tax records we have to extract, or whether the expenditure as per the GST records. This is the first question which arose to us when we were discussing on this clause. So the most important is, you are aware that the books of accounts as required under the income tax law, and there is a specific requirement of maintaining the books of accounts even under the GST law. So the books of accounts more or less remains the same. Only certain documentation, certain informations are quite specific to the income tax law, and certain records and documents are quite specific to the GST law. So now the issue is whether we are going to take as per income tax records or GST records. I'll give you one simple example. For example, if the goods are in transit, on say 27th March, the goods are in transit and it reached on 3rd April 2021, let us presume. What we'll do, we'll take it for the income tax purpose, we take it as a purchases, am I right? Because those are the transit purchases. For GST purposes, we will not record it as inward supply. Why? Because still there is no physical receipt of goods. So there might be a disparity between the records maintained for the income tax purpose and the GST records as accounted for income tax or GST purpose. So there might be a disparity. So which record we have to take it finally? As this is a mandate under the income tax law, so this has to be, I believe that the expenditure as per the income tax record should be considered for disclosure purpose, right? Next is whether capital expenditure should be disclosed or revenue expenditure should be disclosed, or both should be disclosed. But if you read the institute guidance note, they have stated that capital expenditure is not required to be disclosed. There are certain views that capital expenditure is not required to be disclosed. But even I believe that yes, because they are not asking anything as revenue expenditure or capital expenditure. The expenditure can be revenue, or it can be a capital, or the expenditure can be in the form of inputs or input services or capital goods, right? So, but the institute guidance is giving a note that capital expenditures are not required. But if you are really disclosing that capital expenditure, please make a note in your 3CA and 3CB saying that we are also incorporating the expenditure of capital expenditure. Otherwise, based on the guidance note, only revenue expenditure has to be disclosed. Any other view? Yes. Should also be incorporated. That it has to be incorporated. Because there is some example there where they have added like saying that it is not required actually. You can read the last 2-3 lines where they were adding in an example like They are saying it is not required, but basically I also have understanding that it has to be disclosed actually. Capital expenditure and revenue expenditure, though there are different school of thoughts on that, but I presume to be uniformity and for the disclosure purpose, it has to be added, revenue and capital expenditure. Next is whether expenditure including input tax credit or excluding input tax credit. Whether you are going to disclose your expenditure including GST or excluding GST. Excluding GST? Yes? Yes or no? So you agree with me that it has to be disclosed excluding GST wherever you are taking the credit. Wherever the credits are not taken, it becomes part of your cost of your expenditure, and accordingly it has to be taken as including the GST wherever you are booking the cost of purchase. Yes? Yes, I'll come to that later. Now I'm talking on the credits which is eligible and not eligible. So if the credits are eligible, that did not become part of your expenditure. But if the credit is ineligible, then it becomes part of your cost of your inward supplies, right? Then next is whether prepaid expenditure is to be disclosed. What is generally the prepaid expenditure? For example, the invoice might be pertaining to say 2021. But that prepaid expenditure has been booked in the year 21-22. So should we account this in the tax audit report of 21-22, or is it expenses pertaining to 2021? We are booking it as a prepaid expenditure. It is an expenditure, I agree, for the year 21-22. But the invoices will be pertaining to the financial year 2021. So you should not relate to your invoices. You should correlate to your expenditures. Am I right? Or you should correlate to your invoices. Because there are certain instances where you have to correlate with your invoices. So in this case, prepaid expenditure, I still believe that it has to be disclosed because it is becoming part of your expenditure and it has to be disclosed. But please add a note in your 3CB or wherever the annexure you are going to prepare, please add a note on that the invoice pertaining to the erstwhile financial year, but the expenditure has been booked in the financial year 21-22. Wherever specific note is required or explanation is required, please add it in your annexure format actually. The next is whether expenditure is disclosed in table 14. I'll take this at the end of the session by disclosing that. The next is whether expenditure incurred under reverse charge liability to be declared. There are certain expenditures. I think most of you are aware of this because already we are completed 5 years of GST, and we are aware that there are certain expenses which are liable for reverse charge. So the basic common more expenses are like legal fees, GTA, yes, sponsorship services. So all these kind of services, wherever we are having a reverse charge liability, there is a possibility that your vendor might be registered or your vendor might be unregistered also, but you are liable to pay taxes under the reverse charge. So here the classification is required under the reverse charge from the registered entity and from the unregistered entity. So the same reverse charge can have the impact of both a registered entity as well as unregistered entity. As you are aware, 9.4 is not applicable, only 9.3 is applicable, where they are covering certain notified supplies. So in that, you have to bifurcate the expenditure from the registered entity and unregistered entities, right? Am I right? For example, what are the examples of reverse charge? Like legal fees, in many instances, your advocate may not be registered. So you have to disclose that reverse charge from the unregistered supplier. If your advocate is registered, then you can put it as a expenditure from a registered entities, right? So that way you have to classify all your reverse charge expenditure. Whether detailed expenditure report should be given or summary expenditure report should be given. What do you think actually? Because if you read clause 44, if you see clause 44, it will get added if you want to add it. So should you give detailed or should you give breakup wise? Will it getting added your other clauses in their clause 44? Have anybody has tried giving the breakup of expenditure? One by one it is coming actually, sequence is coming. So should you give consolidated informations or breakup of head of expenditures? Which one is more preferable actually? Detailed is better. So you want to give the breakup of expenditure, or you want to give a consolidated informations with the supporting annexure. Huh? That can be, I think, at the time of assessment, you can use it actually, or for your internal purpose, you can use it. So there is no such, they have not specified that it should be given consolidated or headwise, but it is your discretion to report it. But ultimately, whatever you're reporting, it should reconcile with your statements, right? I still believe that you can give the summary informations so that tomorrow, if they give the individual reconciliation with GST, it should not have an impact actually. So if you are able to give consolidated, you can give consolidated. If you are able to reconcile your figures headwise, you can give even headwise. There is no such mandatory that you have to give consolidated or individual. And next is reverse charge expenditure. Already I've told you, you have to bifurcate from registered and unregistered. Next is this Ola, Uber charges we are paying actually. What do you think? Is it a registered or unregistered? That is also under reverse charge under 9(5). So is it registered or unregistered? What are these Ola charges we are paying or Uber charges we are paying actually? Huh? Registered, right? So that you can bifurcate it. Any doubts here? Let me proceed next. Now the next type of expenditures are where disclosure or non-disclosure is required in clause 44. These are also the expenditures, but whether to disclose or not in clause 44 is the question for all of us today. Depreciation. It's a non-cash item. So I believe disclosure is not at all required in clause 44 because there is no such supply as such from any registered vendor. There's only a expenses which is claimed for the wear and tear of the assets. Next is provision for bad debts. It's an expenditure. Yes. So it's a liability. You are creating a provision for the debt. So according to my view, disclosure is not required. It becomes only a reconciliation item. It is not at all expenditure to be disclosed for bifurcating from registered and unregistered. Even for provision for taxation also, the concept remains the same. It is only a reconciliation item and no disclosure is required for registered and unregistered entities. Next is Schedule 3 of Gst Act. I think some of you are aware on this Schedule 3. There are certain items which are covered under Schedule 3 of the Gst Act, which are neither supply of goods nor supply of services. Out of that, one item is salary, right? So salary is also services which is given against the services rendered by employee to the employer. So this is neither a supply of goods, neither supply of services. So according to my view, disclosure is not required to be given for the salary, including the ESI and PF, because this is purely forming a component of salary, and accordingly, it is not required to be disclosed in clause 44. Any other view? Because this is neither supply of goods, neither supply of services from the GST perspective. So when it is not, are you going to take it either supply from unregistered person or are you going to take it as non-disclosure? I believe that it is not required to be disclosed. Any other view? It's a third schedule item actually. This guidance note has added a lot of confusion, but let us understand the principle actually. Certain confusions are there because different school of thoughts are there in that guidance note. But here we have to understand because conceptually we have to understand whether it is required or not required. So as there is no supply, I believe that there is no requirement of disclosures. You agree? There are certain other expenditures also in Schedule 3, but as of now, we are discussing on salary. And next is disallowed expenditure under ITAX. Sir was asking this question. If it is a disallowed expenditure under the Income Tax Act, like for example, some penalty you would have paid, some late fee you would have paid, this is a disallowed expenditure. So whether that has to be disclosed in your clause 44. That is disallowed for the purpose of computation of total income and taxes, right? But it remains as a expenditure, right? So as it remains as an expenditure, I believe that disclosure is required in clause 44. But where you are going to disclose? That is the second question. Because the classification is asking only from registered entity or unregistered entity. So penalties you are paying to the government or late fees you are paying to the government. So is it a unregistered or registered? So better If you are not able to arrive that, better to add it as a reconciled item. But if you are able to add that, then you can add it under registered or unregistered. But I still believe it is only a reconciliation item. If you are able to arrive registered and unregistered, you can add it up in the respective expenditure. Otherwise, it becomes a reconciliation item. Because depending upon which expenditures are disallowed. For example, there are certain personal expenditures which has been booked in the as a expenditure, and later on when it was computation for income, it is disallowed actually. So it still remains as a expenditure. So as it is booked as a debit item in your profit and loss account, the disclosure is required. You agree? Right? But next is provision for gratuity. Whether this become part of your salary or whether this become part of your provisions. It's a provisional item actually. So it's a liability. So accordingly, the disclosure is not required. Next is loss on sale of fixed assets. You have sold the assets. You have realized the value against that, right? And because of realized value, there is a loss. There can be a profit or there can be a loss, right? But whether this has to be disclosed as an expenditure, yes or no? Not required. So it will become only a reconciliation item, not as a disclosure item, right? Next is partners' remuneration or share of profits, appropriation of profit. Partners' remuneration, is it equated with the salary? Or is it an expenditure? Directors' remunerations, partners' remunerations. It's a thought process. If you are going to give, whether you are going to give as a from registered or unregistered. Who is not registered? Are we going to see the registration of the vendor or are we going to see the registration of recipient? Partnership firm and partners are one and the same. Yes. So are we going to take this as a expenditure incurred from the registered supplier or unregistered supplier? It's not at all a expenditure, but remuneration. Okay, profit, I agree. It is not a expenditure, it is appropriation of profit. Huh? It's a salary. So you want to equate with the salary? See, I think these all are the, when you're going to prepare this, because actually when I was preparing, I was thinking these all are the expenditure which you have to take a decision to make it as a part of your disclosure or make it as a part of reconciliation item. So this is very important to analyze it actually. So partners remuneration, you are claiming it as an expenditure, no issues on that. But whether are you going to show it from registered entity or unregistered entity? Will it fit into both? Whether it is required to disclose or not? Huh? Non-disclosure. So not required to be, rather than disputing, better not to disclose, right? I personally state that wherever you have a doubt, wherever it is, you have a reason of doubt, please don't give incorrect details in that classifications, right? You can make it as a reconciliation item with the reason rather than adding it as a registered or unregistered. Next is reimbursement of expenses. Many times we see that employees incur the expenses in their name and then they claim the reimbursement of expenses from the entities. Basically, you are paying to the employee. Employee had paid to the registered person. We are reimbursing. So if the employee has taken from the registered vendor, I think you can take it as a registered vendor, or if you are not able to classify, take it as a expenses from unregistered person, because you are paying to the employee and employee has paid to the respective vendors. And please advise your clients that wherever the employees are incurring the expenses, please ask them to give the details of the company with the name of GSTN rather than they are taking in their name and then claiming it from the company actually. So this suggestion you can give so that next year it will be very helpful for you to disclose the expenditure accurately. The next expenditure is discounts with GST and without GST. Discount is an expenditure? Yes. Either it is netted off from your sales or it is shown as an expenditure. So whether that has to be disclosed? Discounts are whether it has to be disclosed or not. One is discount received, one is discount allowed. So here we are talking on discount allowed. If you are following net method, it is not. But if you are following gross method, as per 145A, it becomes only a reconciliation item, and I believe that disclosure is not required. Transit purchase, I have already told. Land purchase, especially if the dealers are, if the clients are builders or developers, should it be disclosed? It's exempted, right? So it has to be shown under exempt entry. ESI PF, do you think it is a part of salary expenditure, or should we think that the amount is paid to the government? So is it something expenditure from registered or unregistered? It's forming part of the salary, whether it is an employer contribution or employee contribution. Next. Now let us come to the main point of this form 3CD clause 44 to understand what is this exempt from GST. Expenditure relating to goods or services. Please remember here they want to add both goods and services. So you have to read the simultaneously the exemption notification also. So one is 11/2017 and 1/2017. You have to read the notifications and 2/17, which is giving details of goods and services which are exempted from GST. So what is exempt supply actually? Exempt supply is defined under the GST law. You have to apply the same definition for arriving the figure. So exempt supply means supply of any goods or services or both which are attracts nil rate of tax or which will be wholly exempt from tax under the IGST Act and includes a non-taxable supply. So for example, electricity charges. So that you have to show it as an, though it is treated as a supply of goods, but it is exempted from GST. Interest, that is also a service which has been exempted by way of notification of 12/17. So all this kind of expenditure has to be shown under the first entry, that is the expenditure from the registered entities, right? And what is non-taxable supply? Because the definition of, if you see here, the definition of exempt supply also includes non-taxable supply. So non-taxable supply means a supply of goods or services or both, which is not leviable to tax under this act or under the IGST Act. For example, certain petroleum products, motor spirit, alcoholic for human consumption, all this type of goods are falling under non-taxable charges, non-taxable supply. So fuel charges, if you are incurring like petrol charges and all, that you can show it as an expenditure from exempt supply, right? That clear? So these are the kind of expenditure you have to take it up. Now, if you look the section 35, it is requiring you to maintain the detailed of inward supply details of goods and services. It is not talking on registered or unregistered. So I think you have to bifurcate your inward supply into exempted, taxable, registered, unregistered. This classification you have to do in your inward supply register, whatever you are arriving in your GST inward register you are maintaining. Please additionally classify it as an exempted, taxable, registered, unregistered, so that it can help you out for preparing this clause 44 under the income tax audit report. How many of you have already started working upon clause 44 or already completed clause 44? Work in progress? Huh? Work in progress or completed or commenced? Or we are reading the clause itself today? Yes. Next very important is expenditure relating to entities falling under the composition scheme. Before going into this, we have to understand the composition scheme is applicable to a registered person whose aggregate turnover is below 1.5 crore, and that is applicable to our manufacturers, traders, and this restaurant services. So these are the type of composition suppliers which can fit into this entry. And there is one more composition scheme under 10(2)(a) where your services are below 50 lakhs. They can charge, they are leviable at 6%, but they are not going to charge the GST. Now, how are you going to get this information? Because they are also registered person. How are you going to get the information from your expenditure to understand that they are your composition supplier or regular supplier? The one source of document you can rely is bill of supply, right? Because if they are under composition scheme, they have to issue the bill of supply. Second is they are not going to charge any taxes. If they're issuing bill of supply, they are not going to charge the GST, because if they're exempted, then there will be no GST. But if they are registered and if they're not charging the tax, they can fall under this composition scheme. Third is, I advise if any of your entities are not able to extract these details, because if they are not able to extract these details, then they have to add a disclosure in your 3C A and B saying that they are not able to get this information of composition scheme dealers, so we are not able to classify this expenditure. Right? I think you have to make an attempt. You cannot take an excuse, but you have to make an attempt to get this information, because this is not directly available information except your accounting software. If you have validated the data in your software itself saying it as a composition or regular, then I think that can help you out to extract this information. So otherwise, it will be quite difficult for you to extract, but this has to be extracted. And please check the GSTN of the vendors actually, because if you read the GSTN, you will get to know whether they're under the regular scheme or composition scheme. And basically this composition scheme dealers are going to file only one annual return per year. So they're not going to file GSTR1 and all. So you'll not get the source information from 2A and 2B also. So that is what you have to try to. And the problem is now, if your composition scheme dealers have changed the scheme in between the years. So for part of the year, they might be under the composition scheme. For part of the year, they might be under the regular scheme. So you have to again rework on bifurcating the expenditure for the respective period under the composition scheme and regular scheme. I think if you start working upon this, all other clauses, I don't know how you are going to work upon that. It's a very tedious process, I feel like, if you have to rework on in depth on this breakup of the expenditure. But I feel that macro level you can work upon that, and wherever you are not able to get that information, you can take a strategic decision and accordingly disclose it in your report accordingly. Next is expenditure relating to entities not registered. How are you going to get these informations? See, basically, when you're accounting the expenditure, are you adding the GST number of the vendors also? Are you updating your master data with all that? If you are updating, it can help you out. But if you have not updated the expenditure with the GST number of the vendors, I think it will be very difficult for you to extract the information. So wherever you have not updated, you can take it as an not registered if you have already updated with the registered vendors. So first of all, you have to check whether there is any GSTN in the invoice. If there is no GSTN, it is treated as unregistered vendor. Vendor's turnover might be below specified limit. Next is import of goods. Whether import of goods you are going to show as an expenditure from registered or unregistered. It has to be shown as unregistered. Import of goods, you can show it as expenditure from the unregistered. And import of goods even from SEZ also, you can show it as a unregistered. Now this issue is whether you are going to take it up as a FOB value or CIF value, because if you see Ice Gate bottle, it is showing only FOB value. Yes. So please check the insurance and freight, whatever has been expended as added for the disclosure purpose. The next is import of services, whether you are going to show it as not registered, where you are going to show import of goods and import of services, whether expenditure relating to not registered. Strictly speaking, it is not fitting here actually, because he's not supposed to register. He's outside the territory of India, and we are importing the goods and importing the services. As we don't have specific entry, we are putting in the entry of expenses from the unregistered person, right? Import of goods and import of services can be added. Then unregistered services, we are clear. Next is mercantile purchases or high sea sale. So even this kind of expenditures, you have to decide, especially mercantile purchases where it is stored in go down warehouse and sold it in the custom territory. So I think that also become part of your expenditure relating to entities not registered. Then high sea sale, whether it will be a registered person or third schedule item, it is forming part of your third schedule item. So accordingly, there is no disclosure required for high sea sale. Right? Yes, sir. Yes, this will become all. No, this one, this high sea sale and mercantile purchase. Yeah, because we don't have a classification and we have to disclose these figures because your inward supplies are including this import of goods and purchases within India and outside India. So it will become part of your inward supplies actually. No, I don't think so. Don't show it as a reco item, at least this one. We'll try, we can add it up that we are adding up because there is no specific entry for import of goods and services. So we are adding in the entry of relating to entities not registered. So if you strictly speaking, they are not registered in India. So that's why we are taking it as a not registered. But they are not supposed to register also actually. Yeah. So that is what the interpretation is there. But better to disclose in this. That is what I believe that. Because major items will be from your purchases and import of services. If you have imports and purchases, I think this will be the major expenditure which will be required to be disclosed. Next entry is total payment to registered entities. I don't know, when I saw the heading, it is showing breakup of expenditure, right? It is showing the breakup of expenditure from registered entities and unregistered entities. But if you see one of the clause, it is also asking you to give the details of payment made to a vendor actually, to a registered vendor. So I think the heading what is given and the clause what is required is contravening, but anyway, it has to be disclosed. Now, how to get this payment details? How are you going to arrive this payment details in the uh, this? How are we going to arrive the amount paid to the vendor for the respective year? Because there is a possibility that you will have opening balances. Yes, and this payment, they are not asking the total payment. They are asking only payment made to the registered vendors. So when this clause is specific, if you can see this clause is asking us to give total payment to a registered entities. So you have to bifurcate your creditors as registered vendor and add your inward supplies, that is opening balance of creditors, add your inward supplies for the respective years, deduct payment of creditors pertaining to your opening balances, and only pertaining to the current year inward supplies has to be disclosed in your clause 44. How you arrive, it is your discretion, but this is one of the way you can make an attempt. Yes? Yes? No, because see, when we are showing the purchases for the current year, we also have to show the payment against that inward supplies for the. See, there is a possibility that there will be outstanding for the earlier financial years. It, because if you read the heading, they are asking for the financial year, right? See, they are saying breakup of total expenditure of entities registered or not registered under the, and when they're talking of relating to goods and all, total payment to registered entities. So I think if, yeah, that is what. No. See what happens. They have given three clauses. One is pertaining to your exempt supply, one is pertaining to composition, and one is all other registered. So all the registered expenses are booked under that entries, right? So whatever the registered payments you have made to those creditors, that expenses has to be disclosed. I know, I'm not saying that this is a format. I'm saying supporting, you can prepare like this. So the objective of this slide is to make you understand that whatever the payment you are going to make, please be clear the payments are pertaining to the opening balances or the payment is pertaining to those registered purchases. Yes, yes. Okay, so payment, whatever the payment you are making that, yeah, because there is a separate column, if you see here. So this total payment to registered entities, it will just summation of 3, 4, 5. So no payment entries are allowed here. You are not going to take any. Yes. Actually, then they would have used the word here, total expenditure relating to expenditure. It would have used 3, 4, 5 total rather than, because payment is giving an indication that whether the payment also should be disclosed for that expenditure. Yeah, already free, already automatic actually. It is automatic. So 6 is taking the summation of 3, 4, 5. Or is it taking a 2 as it is? Huh. Got it. So 3, 4, 5 is the summation, 6 is summation of 3, 4, 5. Okay, then only it will get added up actually. So then whichever are the reconciliation item, that will become as a, because we were reading this as a total payment to the registered entries. Yeah, that's what I was saying, because it is asking the details of expenditure, then the terminology itself is wrong actually, right? If you read strictly the expenditure heading wise, these all are not required. They can directly ask for the total figure actually. They need not give so much breakup of composition, exempted and all. It remains as an expenditure. See, whenever you are asking the total expenditure, then why again the total payments are required, right? Because already the figures are there, but I think the wordings, the total payment to registered entities are giving a different school of thoughts, because they are either saying that it should be inbuilt as a 3, 4, 5, or it is a payment to a vendor. But if it is a inbuilt already as 3, 4, 5, then that summation should be added in your tax audit report. The next is whether you have to reconcile with your 3B. How many of you are filing 3B? Most of you are filing this 3B under the GST law. So whether we can capture the data from the 3B also, because it, huh? We don't give the value actually. We only give the tax credit component in our 3B. That is the one reason. But some information you can capture it. One is like inward supply liable for reverse charge. If you want, you can capture that information. And you can try to get the amount of eligible and ineligible, so that to the extent of ineligible, you can book the cost accordingly, and to the extent of eligible, you can exclude it accordingly. And there is supply received from, actually most of them are not filling this table actually in 3B. If you see, it is optional, it is not mandatory. So if they're filling this table, I think it can help you out to derive the amount under composition scheme, exempt and nil rated supply, as well as non-GST supply. So that is optional. So if it is filled, you can get that informations. The next is cross verify with GST 3B, 2A, 2B. Is it mandatory that your clause 44 should reconcile with your 3B, 2A, 2B? Something is stated somewhere. There is nothing as such. Is it that you have to reconcile? I think if you start reconciling, reconciliation ka reconciliation. Yes, because, but if you prepare reconciliation, I will tell you definitely it will help you out for your GST audit report, and it will help you out to reconcile your details integrating with your other laws also. So if you're able to do that, it will really help you out because you can get the major chunk of informations from 2A itself. See, there is a possibility that the data in GSTR 2A may not be the same, but it will give you the major for whenever you are going to give a breakup of expenditure, it will at least help you out to derive the expenditure from registered entities. So if you really want to get that information, that I think the major chunk of informations you will get from ICDS portal, you'll get a major chunk of information from 2A and 2B. So I think you can just try to see if you are able to get that source of information to understand whether they are registered or unregistered. Because if you see 2A, I'll show you here, if you see here 2A, you are able to see that you can get the GSTN of supplier, you can get the supplier name. So at least with this, you can get to know the expenditure details, how many are registered, and accordingly you can get that information. So this will help you out to some extent for extracting your details actually. And GSTR 2B also will give certain invoice details. So you can reconcile your 2A, 2B data with your actual inward supplies. So this is one way of looking into that. Next issue is interbranch transfers, cross charges, ISD credits. Interbranch transfer should be shown. Why? Because it gets net off when you are going to prepare your consolidated financials. For example, you have multiple GST across India. So whenever you are going to prepare your, though there is a trial balance for each state, but when you are going to consolidate, your interbranch transfers will get netted off, right? So even cross charge will get netted off, and IST is nothing but distribution of credits along with the expenses. Next is reconciliations. If you are going to do, you have to do reconciliation with 3B. You have to do reconciliation with 9C and e-way bill, and you have to do the clause 44 of your tax audit report. I know the time is less, but if you are really able to do it, it will definitely assist you in your GST audit, and you will have a, because if you see today the way the GST audit assessments are going on, they are trying to reconcile all your details with your income tax audit report also. So if you are able to, I think this is also one of the items which they might look in as a reconciliation item. So it will be more better if you are able to reconcile all these items together. Multiple GST, I've already told you that it will be a consolidating all your trial balance. And if you are seeing 3B, it is only disclosing the credit, not inward supply. Disclosure of block credit. There will be certain credits which are ineligible credit. So that you are going to show it as registered or unregistered, you have to bifurcate irrespective of whether it is eligible or ineligible. Because here the income tax clause is not asking you to give the details of eligible or ineligible. It is only asking you the details of registered and unregistered vendors. Disallowed expenditure already. Whether VAT on petroleum products should be disclosed as exempt or unregistered. You are paying certain state excise duties on certain items. You are paying VAT also on certain items. So whether it will be shown as a registered purchases or it should be shown as a unregistered or not to be disclosed. They are collecting VAT, but that is what you have to decide, whether if they are registered, take it as a registered. If they are not registered, take it as an exempt, or because exempt includes non-taxable supply, so non-taxable includes this petroleum also. Expenditure including GST credit or excluding, already I've told you, it is excluding GST credit. And one more, if you are going to derive the information from 2A and 2B, because GST 2A was for 9 months, and from 1st Jan to 31st March, it is 2B. So partly information you have to capture from 2A and part information from 2B. That is also one more tedious job. So I think you have to rely on that. Only for reliability of informations you can take, not for the purpose of reconciliation. Whether verification of registration of vendor is required, whether validation is required of the vendor, whether you have to check that he is a registered or unregistered. When you are going to report, whether you have to check whether he is registered or unregistered. You have to check all the vendors, test check. You have to do the test check, right? Please do the test check of registration and validity of data. And implication, if master data are not configured, please configure the master data, start doing that so that reporting will become easy. Whether you have to reconcile your expenditures with ITR 3, 5 and 6. Whether you have to reconcile your expenses, whatever you are disclosing in clause 44, with ITR 3 or ITR 5 or ITR 6? Yes or no? You are disclosing na in expenditure in ITR 5, ITR 6? Whether we have to reconcile those expenses? Yes. Automatic hai, but just you have to reconfirm the figures because there are certain expenditure which we are taking it only for the disclosure purpose. And there are certain expenditure which we are taking it as a reconciliation item. So please recheck on that reconciliation. Whether internal reconciliation is required among the clauses of 3CD? Like because there is one clause of 27, I remember something where they are asking the information of input tax credit availed and utilized. So something internal reconciliation is required. I feel that is independent of this. So don't break up your head for reconciling your internal reconciliation of circulars. Please advisable to all the registered entities to take a management report. Yes, because it is ultimately the data given by the taxpayer you are going to upload here. So the reliability, you have to take a management report on this clause, especially clause 44, and get this certified as an annexure, or at the time of assessment, this can be taken as a supporting document, but please take a management report for, especially for clause 44, right? Please add this clause in your management report also. And don't disclose incorrect facts. Rather add a disclosure as not maintain the data as per clause 44. Be clear. Don't just want to disclose, don't disclose it. If you're not very sure of registered or unregistered, please don't disclose the wrong information in tax audit. We don't know how they are going to relook this data tomorrow, whether they are going to relook or not, we are not very sure. But if you are disclosing, please disclose the corrected figure. Otherwise, don't disclose this figure in clause 44 for the purpose of disclosure. Additional exercise for the first year of implementation. This will be a first year of this. I know there will be multiple reconciliations, multiple supporting you have to prepare, but definitely it will be a cakewalk for you next year if you are able to prepare the supporting statement in the first year itself. Major data validations, you can get it from 2B, 2A and ICDS itself. So these are the certain invoices I've already told you. So basically, if you look the list of expenses here, we can have just a thought process. For example, GST purchases at 5%, 12%, 18%. We are very clear it is from registered entities. Import of goods, services, we are showing it as an unregistered. Freight inward, depending upon whether your vendor is registered or unregistered. Vehicle insurance, same, you have to look into that. See, packing material, advertisement expenses, vehicle maintenance, audit fees, bad debt, all these are, you have to check their GST number. Bad debt written off, it is only a reconciliation item. Traveling expenses, just check it, is it registered or unregistered, or is it something a rent-a-cab, you can check it. Computer maintenance, again you have to check the vendors. Conveyance expenses, it can be a summation of various expenses. If you're not able to get the breakup, because conveyance expenses can be, you may not be able to maintain the data of registered or unregistered, so you can take it as an unregistered expenses. Courier charges, depreciations, we are very clear. Telephone and mobile expenses. So what you can do is majorly just see the expenses which are registered, which you find it as registered. Please pull out the information. Then there will be very minimum information for you to pull for unregistered and other information. So try to pull the information of registered. Just check this. For example, interest on loan. We are very clear it is an exempted. Stationary expenses, you can just recheck the vendors. Loss on sale of it is only reconciliation. Foreign exchange gains or loss, it is only a reconciliation, depending upon whether it is against the export of goods or services you are getting that. So ultimately there is a gain or loss on that foreign exchange. So it is not a required for disclosure. It is only a reconciliation item. Then provision we have already discussed. Legal charges, please check the reverse charge impact on that. Professional taxes, because this is also a tax which is paid. So here also it is only a reconciliation item. Disclosure is not required for professional taxes, right? So ultimately, you have to arrive your total expenditure. Try to see what are the items you have disclosed already in 44. Try to see what are your reconciliation item. And if there are certain items which you are not able to decide, you can write as a mark in your report in 3C and 3CB. Please prepare the annexures for all your supporting details. Try to give consolidated and corrected informations in the report. And see that all expenditures are there in your profit and loss account. It reconcile with your annexures. And try to read guidance note on tax audit by ICI to understand better. And all the decisions to be taken is in the hands of the tax auditor for the reporting purpose. So depending upon the nature of business, depending upon the way the books of accounts are maintained, and depending upon the informations obtained, you can classify the expenses. So there will be certain clauses in GSTR 9, 9C, all these expenditures are there, but this is only giving the details of inward supplies. It is giving only the details of input credit. It is not giving the details of inward supplies. So I think this is only a supporting. So I think if you are going to prepare this clause according to clause 14 of GSTR 9C, I think if you are able to prepare in this format, both your clause for GST and income tax can serve the purpose, because this is one of the requirement of your audit report, that is GSTR 9C clause 14. So if you are able to bifurcate the value and total amount of ITC and eligible ITC, I will tell you that this will definitely help you out tomorrow when they are going to reconcile. Though it is an optional from last 2 years that you can give the consolidated figure in this clause 14. But if you're able to do the breakup of this expenditure with all the details, I think this will help you out for reconciling for income tax purpose and GST purpose also. So basically this clause 14 is talking on reconciliation of ITC declared in annual return with ITC availed on expenses as per audited annual financial statement or books of accounts. So they can take this information from any of the source for reconciliations. So these are the certain expenses which are there in GSTR. So you can use this format for preparing your reconciliation if you want to take it as a base for your reconciliation. Otherwise, ultimately, it is a your source of your books of accounts will assist you to understand your documentations, your invoices will help you out to understand the data from the registered entities and unregistered entities, right? So anything, I think this was one class which has been given me for 1 hour. So if there is anything, any questions, anything you think that you have any other thought process on this, we can try to work up, we can try to discuss on that. Yes, you can ask. Online questions are there. Can you open, can you just? Okay.
No other queries, huh? No other queries there. Not clear. Nothing is clear or all are clear? Okay. So we have some questions online. There's a question from Prakash Kadur. Column 2 says expenditure, column 6 says payment. Expenditure and payments are different. Whether we need to concentrate on the expenditure or payment, or we should we read payment as expenditure?
I think this issue we have discussed while we were interacting on that. Basically, you have to concentrate on the expenditure and not on the payment. So you have to concentrate on expenditure relating to goods or services exempt from tax, or relating to entities falling under composition scheme, or relating to other registered entities, right? So this is the most important classifications. They have to make it when the expenditure is pertaining to a registered from a registered vendor.
Rajagopal T has drawn. Is there any possibility of finding composite dealer or other dealer from GSTIN itself?
Yeah, you can you can check the status of the dealer when you're entering the GSTN of your vendor. You can get to know whether he's under the regular scheme or composition scheme. So I think you have to recheck the data in your GSTN portal. You can get it.
In case of traveling bill, lodging bill, local conveyance, boarding charges. In such case, the employee will provide the bills. Such employee will have his morning tiffin in Darshini, food at small hotel. How to break such expenditure and report?
This issue, I think we were also discussing as a reimbursement of expenses. So generally what happens, employee incurs these expenses and claim it from the company. So As these expenditures are not directly from the registered vendor, it can be taken it as an expenditure from unregistered vendor. But if the employee has taken the bill in the name of the company, then you can book it as an expenditure from a registered entity.
Where do we place for the non-GST goods like petrol and diesel used for vehicle generator? I think we have discussed.
Yeah, already I have defined the definition of exempted supply includes even the non-taxable supply. So non-taxable supply includes the petroleum product, so it becomes part of your exempted supply actually. So it has to be disclosed in column 3.
I think next question also answered. He is asking on loss on fixed asset.
No, you can repeat, no problem if you would have missed. What is that?
So all P&L expenses we have to report, or could we please elaborate on loss on fixed asset?
Yeah, loss on fixed asset.
Work in progress.
Yeah.
Yeah.
Yeah, loss on fixed asset, already we are clear that it is only a reconciliation item and not a disclosure item. So it is to be only as a reconciliation, not a disclosure.
I have doubts regarding applicability of clause 44 with respect to purchase of land I think is covered under section schedule 3, hence it's not applicable.
Yes.
Please enlighten on this, and even for
See, if you
prepaid
read third schedule, it is talking on sale of land, not purchase of land. And whereas here the reporting is required for expenditure pertaining from registered or unregistered. So if the land is procured from registered, it has to be disclosed as registered expenses. If it is from unregistered person, it has to be disclosed as unregistered expenditure.
Last question. Client is a doctor who need not be registered under GST and need not maintaining any details with respect to his GST purchases.
See, if you read the heading of this clause 44, they're asking the details of breakup of expenditure from registered person or unregistered person under the GST law. Though the doctor is unregistered under the GST law, but he has to give a details of bifurcation of expenses as required under clause 44 of Form 3CD.
As per technical guide, the word payment should be harmoniously be interpreted as expenditure with regard to column 3, 4, 5.
Yes.
Hence, total expenditure in respect of registered entities should be reported in column number 6.
Yes.
This aspect.
Yes.
Okay. Any other question?
Hi, Madam Annapurna. My name is Gunushekar. So I just want to know, like, this is with respect to the bogus case on the GST. So what I would like to ask is, if registered dealer or unregistered dealer, I mean registered or unregistered, as per section, as you said, that 22 and 24 and 25. So if they have claiming, that means if which is not there, but which they try to claim, it could be invoice which are not there, but try to an expense which is not there, total expense out of that breakup of expense which is not there, but try to claim. What are the penal provisions that will be there? So that is what I would like to know. A bogus case of GST, bogus case on GST. That is what I would like to know, Annapurna. So thank you.
See, your question is anyway not forming part of clause 44, but still for reference, I'll just tell you there is a penalty which has been specified for bogus billing, that is 122 1A, you can read, and you can read 132. There are specific penal provisions for bogus billing. So I think you can read that section, and where the penalty can go up to 3 times of your taxes. So that is what, if there is a bogus billing, that is required to be, there is a specific penalty specified under the GST law, right? So 122 1A and 132 can help you out to arrive the quantum of penalties, right?
Hope we had wonderful session. I thank you all for the
Thank you all.
I request our secretary Pramod to present a memento to the speaker.
Welcome, Naveen Kariwal. Sorry, I have taken your time, or I have accommodated your time. I don't know, but
no, ma'am. We'll reassemble at 4, ma'am. We'll break the.
Okay, we are having the
tea
breakup.
time.
Okay, thank you all. Thank you.